Hey traders, welcome back. Welcome to Forex Mechanics. Now, if you are new to Forex trading, then I highly recommend you watch this video till the end because some of the information that I'm going to be sharing in this video will definitely help you. And based on my experience, I am just sharing my experience here, and I feel some of the information I'm sharing is really going to help you a lot. So watch this video till the end. Okay. So if you are new to Forex, then I'm sure that by now you have already tried your hand on some applications like MetaTrader for the same application which is there on my screen. You've already shortlisted a broker, the broker with whom you are maybe demo trading. Obviously, I don't recommend you trade live until you are very confident about your trading skills. And if you are looking at brokers as such, then please do your thorough background check. Make sure that you are with a regulated forex broker. I personally trade with Pepperstone. I have had good experience with them. Even XCAM Global, for that matter, I've had good experience with them. So obviously, if you're looking at a broker, then be very careful when you select a broker and make sure you have all the background checks done, right? So if you are new, then obviously you have shortlisted a strategy, right? So obviously you shortlisted a strategy which has got some indicators, maybe a standard indicator, or you have some custom coded indicators. Now, irrespective of whatever indicators you're using, if you're new, then I'm recommending, if you're new to Forex trading, then I recommend that you use less indicators so that it is, less confusing and it is easier for you to grasp things. Now, let's say based on your existing trading strategy, what you could possibly do is simply add currency strength and weakness analysis, right? Now, obviously, I've been stressing on this since my first video, and I can't tell you enough about how important it is to look at currency strength and weakness, especially in Forex trading, right? If you have any trading experience, or if you have traded stock market in the past, then obviously that it's the same. You're just buying and selling. Even here you're buying and selling, right? You're buying and selling. So here you have currency pairs. So in a stock market you would buy Google, Microsoft, or sell some shares or buy some shares. Here you're trading with currency pairs. Now on my screen you have the AUD USD chart, right? So this is the AUD USD, and let's take an example that happened today. Now on my screen, obviously I don't have a lot of indicators here, but this is just for simple explanation. There are a set of moving averages on the screen. Now you can see here it's the 30-minute time frame. Now let's say based on your existing strategy that you have started to use, all you need to do is, before you really place a trade, check um, if the currencies that are involved in the currency pair are moving against each other, right? I repeat, so let's say if you were trading the AUD USD today and you got a buy signal, right? Before you take that buy signal, you're going to check if the Aussie is going up and the USD is going down. Why? Because you're looking at buying the AUD USD, so you would want the AUD to move up, right? So there has to be buying pressure on the Aussie and selling pressure on the USD. So here you can see today in the Asian session, AUD USD was going up. So it started to move up. The reason being, so here I'm using another MetaTrader platform by a broker called Light Forex. Now this broker obviously gives you access to these individual currency index charts. Now you can see here, this is not a currency pair, but this is just a dollar chart, right? So it's only telling you what the dollar is doing individually as a currency. And here you have the Aussie chart. So here you basically have the AUD chart where it's telling you what the Australian dollar is doing individually as a standalone currency. So this basically tells you that the AUD was going up and the USD was going down, right? So when you know that the AUD is going up and the USD is going down, which means people are buying, traders are buying AUD and they're selling the USD. So obviously buying AUD USD would be the right decision. Now, based on your forex strategy or the indicator or any trading system you use, if you were looking to sell this currency pair today, then obviously you would have had a stop loss hit or you would have had a loss, right? The reason being the currency was moving opposite each other. Now, it all depends on the time zone as well. So this move had already happened in the Asian session. So maybe for a lot of us, when we would have woken up, the move would have already happened by then, right? But irrespective, this is how you look at the market. So let's say you have fixed on your strategy. All you need to do is that you need to apply currency strength and weakness. Now, obviously, lightforex.com is a platform. You can even use tradingview.com also has access to individual currency charts. Then there is CGI Forex also, which has the currency charts on their MetaTrader platform. And you can, of course, use Light Forex as well, right? Now, apart from that, I'm not sure if a lot of you have heard about currency meters. So there are something called as currency meters as well. So this is just one which is freely available. There are a lot of currency meters which are freely available. You can use them and you can apply them to your existing strategies. It basically tells you that which currency is strong and which one is weak. Like you can see today here, the pink denotes the Aussie. This is the AUD chart, and the green denotes the USD, right? So AUD was going up, USD was going down. So you can see here, AUD going up. This is the individual currency chart. USD individual currency chart going down, and you had the AUD USD which was going up. So all I'm trying to say is that if you're new to Forex, this is just my personal experience. Initially, when I started trading, nobody really told me about this. So later on, when I realized that this was the mistake that I was doing, I realized that why a lot of my trade entries would just always go against me. Always. I would say almost every trade would go against me because I never really used to check if any, the strength and weakness of the currency, and rightly so, because a lot of traders, if you are starting off trading Forex, then you wouldn't really know about this because you are just looking at a currency pair, right? You're just looking at one currency pair and you are looking at some indicators or some trading system and you're buying. So does that mean that the strategy of the trading system is bad? No, absolutely not. It may be a very good trading system, a very good trading strategy. It is just that, maybe because as a trader, you are not looking at the individual currency strength and weakness, and that's the reason why most of the trades may be going against you, right? So this is one thing that you could add. Now, the next thing which I would like to really tell you, which is definitely going to help you, again, this is revolving around the strategy that that you are using right now. So here you can see that I simply have EMAs, nothing else. So this is the 30-minute chart, right? So what you could possibly add to your existing strategy is basically looking at the other time frames as well. So here I have the M30, which is the 30-minute time frame chart. So you can look at the higher time frames charts just to see if you are in sync with the longer time frame. So if I'm looking at M30, I will go down to an H1 and an H4, see two time frames above and see how the price is reacting. So here you can see I have a vertical line here. So you can see price was going up. The EMAs were nicely angling up. They were nicely fanned out. So you were looking at buying this currency pair. Obviously, you had seen the individual AUD chart and the USD chart as well. Now, before you really look at an entry, you are simply going. So let's say if the market would have been something like this, right? So let's say you're looking at currency. So you see here, price was going up. Now, if you look at the H1 chart, you can see how even on the H1, the EMAs were nicely angling up here. Even on the H4, EMAs were nicely angling up. For that matter, even on the daily, it was moving up. So you can see that, you got an entry or you got a buy signal on AUD USD, but time frames above, two time frames, at least a couple of time frames up, so in typically when I am looking at day trade setups on 30-minute time frame, then I'm looking at H1 and H4. So if the H1 and H4 are in line, then there are higher chances that that trade would go into profit, right? So the idea is to make sure that you put odds in your favor. So obviously, that based on your strategy, you had obviously looked at strength and weakness, but along with that, if you can do some very simple multi-time frame analysis, I am sure that will also help you. Now, next thing that you would obviously want to remember is that don't trade without a stop loss. Now, that goes without saying, but unfortunately, there are people who don't use stop loss. I didn't really know why, but don't really trade without a stop loss. And once you know that you are trading with the stop loss, then obviously automatically you will look at risk management as well. Don't look at trading more than 2% per trade, 2 to 3% at the most of your account balance. So let's say if you're looking at buying the AUD USD in this case here, and you had, let's say this was your entry, and you thought of putting your stop loss here, which is around 21 pips. So based on your account balance and the 21 pip stop loss, so there are many calculators which are available. I recommend that you start using some calculators even before you make entries. And obviously you are going to be demo trading for at least 3 months to 4 months, or until you're very confident about your trading skills. So start making use of these risk management calculators. Start putting stop loss even in your demo trades, because that's how you learn. I mean, just because it's a demo account and it's not your money or you got nothing to lose, don't look at it that way. In fact, I would suggest that let's say if you plan to open a real account in future with, let's say, $2,000 or $1,000, then I recommend that you open a demo account with $1,000 or $2,000. Don't open demo accounts with $5,000, $10,000, $50,000, because it doesn't make sense, because that's not the amount of money that you're going to put, you will be putting, right? So you can, if you intend to trade with $1,000 in future in your real account, then make sure that you have a demo account with $1,000, because what's going to happen is that you're going to tune yourself in the same way, right? And if you're trading with $1,000 account, and based on your strategy, every time you look at taking a trade entry, you calculate what the stop loss is. Based on your stop loss, you calculate how much lot size you have to take by risking not more than 2 to 3% per trade. Once you make it a habit on your demo account, then it'll automatically become a habit, and it's a good habit, because in future when you open your real account, uh, you will do it by default. I mean, that I have to place a stop loss. I need to calculate what my stop loss is, and based on my stop loss, I need to find out how much lot I need to take, right? So do I trade micro lots, mini lot, standard lot? Of course, depends on your account balance and how much is the stop loss, right? So make it a practice to start using risk management calculators. I mean, there are so many calculators which are available online for free. There are indicators available on MetaTrader for free. You can just use any of them and simply apply a stop loss, and based on your stop loss, calculate how much should you risk per trade, right? So if you are looking at 2%, 3%, let's say 2% of your account balance is, say, 0.07 lot, then that's it. You trade 0.07. You don't go above that, right? So make that a practice, because ultimately what's going to happen is that you will have a good strategy, right? You look at currency strength and weakness. You are looking at multiple time frame analysis. In spite of all this, still trades go against you. I mean, trades go against me every now and then, and it's only because you have a stop loss, right? You are stopping your loss, so you are in the game for the next trade, right? So I can't stress enough that how important simply managing your money is, and I can't tell you how important it is to open a demo account with the same amount that you intend to open your real account with. And trust me, guys, this is going to really help you, because I personally know a lot of traders who are trading on demo account. They don't follow risk management. They use the best of strategies, no doubt, but 1, 2, 3, 4 bad trades, and the whole demo account is gone. And obviously they have not lost anything, so they open another demo account. But what's happening is the psychology. uh, as a trader, you are not developing that psychology of a trader, because you are simply opening another $5,000 account or a $10,000 account. And trust me, when you open a real account, you must be using the best of strategy. It is not going to help you. You may look at strength and weakness, you may look at multi-time frame analysis, you have the best of strategy. It is not going to help you because you will never develop a mindset uh, of a trader. So it is very important that please make it a point that if you are trading, if you're new to Forex and if you've just started trading Forex, and if you've randomly opened a demo account with some random account balance, then I highly recommend that you stop it, delete that account, open a new demo account and use the same account size. So let's say if you want to trade 500 USD in real, make sure you have a demo account with 500 or 1000 or 1500 or 2000, right? That's the only way you will learn well in demo account, and you'll automatically put that into practice in your real account, right? So this is very important, guys. So if I have to talk in a nutshell, if you are new to Forex, so if you are absolutely new with absolutely no trading experience, then I'm sure these points that I've told you is going to help you in future, because I'm sure you're very new, so you need to understand a lot of things like installing an application, bid, ask, pip value. There are multiple things that you need to know. So if you're very new, then I highly recommend you go to www.babypips.com. They have a very good beginner course which will help you. But if you know trading, right? If you've traded in the past and you have some basic experience, then simply with your existing strategy, look at currency strength and weakness. You can look at currency strength and weakness by looking at individual index charts. You can look at currency strength meters. You can, and most of them are freely available, right? So you can use these indicators to, just to gauge if you're going in the right direction. Then you can obviously apply multi-time frame analysis. So typically in my case, if I'm looking at M30, and I'm looking at mostly day trading. So if I'm looking at the 30-minute time frame, I'm only looking at H1, H4, and maybe the daily, right? So I just go 2 to 3 time frames above. So if I'm looking at M30, then I'm looking at H1, H4, and possibly D1. Right, so you've done currency strength and weakness, you've done multi-time frame analysis, then obviously the most important thing is risk management, right? You just have a stop loss. You need to have a stop loss. You can't trade without a stop loss. Okay, so if you do these basic things, then you will sustain the market. That's something I can for sure tell you, that if you have a very good trading system, a good trading strategy, which has got a good success ratio, simply by looking at strength, weakness, and analyzing multiple time frames, I am sure in the long run you will be successful. Right now, obviously, I share my own experiences, my trading experience, and my trade setups. The trades that I'm looking at on my Telegram channel. It's free. You can subscribe. It's a free channel. You can subscribe. I will share the link in the description. Right, so please feel free to join the channel, and I share a lot of information there, so I'm sure it'll help you. And if you have any questions, please leave it in the comment section below, and please subscribe to the channel. I will post more videos soon. Thank you. Have a nice day. Bye bye.